Good morning, everyone, and welcome to the European crossover. It's NFP day, so we'll see how everything lines up. The dollar yen really came back. That was quite a pullback. I mean, it popped back up from that 320. That was that area that I thought was the last area to go in and cover. From the shorts from yesterday, they kind of had a little bit under fire. Now, it's kind of my plan was to get short around the 382, but preferably wait for ISM manufacturing. It came in weaker, and then that really knocked the wheels off the market. But the 484, that's where I came in, so I thought that was a pretty good level. I thought, maybe it looked like they were going to push up as high as maybe 404, 407. But they didn't, so it all worked out overall, but I was trying to be careful because this thing could have easily gotten away and just tried to keep on plugging away. And you can see the response we've seen today, so pretty good response overall for the dollar yen to come back. On the euro, my levels are 11.93, 12.16, and 12.36. Actually, it's 12.34. So we'll take a look here. This is something I've looked at too. So we'll go and mention this. We'll start here. The greenback was flat against a basket of major currencies at 95.72, having fallen 0.4% on Thursday. The dollar index its worst performance in 2 weeks after surprise contraction in U.S. manufacturing that cast some doubts on the strength of the U.S. economic growth. That's not that big of a surprise because we saw that manufacturing jobs were lost the previous month. Here it says 9, but compared to the prior one, I know that manufacturing jobs, they had lost some, so it wasn't surprised that it shouldn't be as strong. So, but anyway, Thursday's fall in the dollar tells us that there still is a lot of skepticism over imminent rate hike by the Fed in the market. Well, I think this is pretty effing stupid, honestly. Let's see where the dollar came from. I mean, the euro was basically in the toilet. The dollar at its highs. I mean, oh my goodness, should the dollar, heaven forbid, the dollar give up a few pips? Because it's the end of the world, according to this guy. There's a lot of skepticism over the imminent rate hike by the Fed market. I mean, give me a frickin' break. Like I said, I don't know if they're going to raise this month. We'll know today, in my eyes. But I mean, come on. The dollar yen sold off, what, 80 pips? I mean, basically. And the euro gained, like, what, 60 pips? And the guy's like, oh, yeah, there's that very big skepticism. So that's pretty effing stupid in my book. It was just some profit taking. But all these idiots, they always got to make up something. There's something, But anyway, some analysts said the news that the world's biggest company, Apple, would repatriate billions of dollars of global profits to the United States next year would lend support to the dollar at the margins. But Wynn was skeptical about that. Yes, if they move a large amount, that might move the market at some point in time just because liquidity has become thinner. But all in all, I'm very doubtful that a single corporation is able to sustainably move an exchange rate such as the dollar. Believe me, if Apple's going to start to move, believe me, it will move the dollar. Once again, this guy proves he's an effing idiot. Because of the amount of money that they would bring across. I mean, I see where they think, oh, okay, this currency, the pound's stronger here, whatever, because of this corporation is going to buy out, there's a merger buyout, and then you're talking potentially the world's largest company, not that I don't think it's going to happen, but potentially repatriating billions of dollars, and that's not going to move the needle. You're effing stupid. The main focus of the day, says is the jobs data report. We're expected to have added 180,000 jobs in August, according to the median estimate of 91 economists polled by Reuters. I would think the markets will gradually price in a rate hike unless the payrolls come below 150, said Minori Uchida, chief currency analyst at the Bank of Tokyo Mitsubishi. Markets are pricing in less than a 1 in 4 chance. Well, and it says Cleveland's Fed President Loretta Mester, a voting member of the Fed's policy setting committee this year, was the latest to join the chorus on Thursday, saying the U.S. labor market is at full strength and the Fed needs to be on a path of gradual rate increases. I mean, I'm already on record saying they get 245K plus 0.3 tenths wage growth gain, and it's a done deal. You can take that to the bank. They will raise. But I'm not expecting one that strong. I'm expecting about in the 2 teens. I know that they're expecting 180. I think I don't have a good take on this one, but I think it's just a surprise. I think it could be anywhere from 182 on up to the 220s. Could it be even stronger? Yeah, but I think it'd be kind of like a last hurrah type thing too, if it were to come in really strong. So I think that if they got something in the 180s, it's almost like a Goldilocks number. And they wouldn't, I don't think they'll raise. They could, but I don't think they would. With wage growth of 0.2, it'd be just like a Goldilocks number. They probably put them on hold till December. But I already said if they get even 230, that'll give them a 3-month average of 250. So that'll put them right there. Something like that, and then coupled with 0.2 wage growth would still leave it almost like a 50-50 in my book. But 0.3, I think that would kick it off. So we're going to move into the charts. Well, we'll take a look real quick at the data. So here we are. Last month was 255, real blowout number. After the previous month, 2 whatever. So we'll have to see. See, the last 2 months they were predicting like 187, okay, 175, and the actual was 292. Last month they were predicting 180, and they got 255. This one was a real shocker, the one in May, 24,000. That was really like, wow. I don't see anything like that, but I think it can be anywhere between 180 and 220. It's going to be amazing. It's going to spook the market because all these idiots have been wrong for so long anyway, so they'll all be drinking out of the same whiskey jug. If we get something like 245, they're going to freak out. Even though I think in perspective, if you were to get something like that, then I think you'd start to slow down a little bit afterwards. But, you know, I think it can be anywhere between 180 and 222, and I'm looking for in the 2 teens. But if it comes in strong, it's going to really spook the market like nobody's business because they've been wrong for so long that they're going to think, oh, my God, there's really a whole lot more underlying strength, and they're going to start viewing the glass as half full now. Wow, you know, we saw the pending new home sales and we were looking for weaker and it came in stronger, and I mean maybe there's more demand than we expected, and you know they're going to start rationalizing a whole bunch of things. You know, the GDP maybe it was because of this, maybe it's because of that, and now things are really starting to get going. And although I think it's going to be overall beneficial for the S&Ps, but it would spook the market. So. But this wage gain growth, that's going to be the key. This one's going to be the key. If we get 0.3 again, freaking forget it. It's a done deal. You can take it to the bank. They're going to raise. If we get another 0.3, they're looking for 0.2. If we get another 0.3, it's on like Donkey Kong, like Blake likes to say. So moving to the charts. I mean, I think these bits of data are very important because that's going to dictate what's going to happen. And you can look at the charts all you want, but how this plays out and how the market interprets it, that's the real name of the game and what's going to happen. The charts are going to tell us what the extremes are. So here's the euro, and I mean, I already mentioned my levels above and below the market. I'm not below the market. I mentioned are 1193, 1216. I should actually say 1215, and then 1233/34. We're going to have to see. I mean, I'm just going to be very patient. You know, last month I actually went long the dollar into the report because at the last minute, I was saying at the very last minute, but then I was thinking, wow, if you think it's going to be bullish, and remember, I was looking for 223 with an upside surprise in the 250s. Boom. Talk about being spot on that pretty good. I mean, 223 with an upside surprise of 250s, because everybody else was looking for the 180s, 175s. But I'm not sure how this number's going to come out. I think you have to let it shake itself out. If we get a, you know, kind of like a weak number, they're going to rally him. So let's see how high they can go. Okay, 1216 is 38%. So let's go mark these off. Personally, I wouldn't be looking for a number that's just that, not very much higher. But if the number kind of came in like 218, not 218, like 191, something like that, then that could come into play. But we'll take a look at this stuff, so hang on. 1245 is to 50%. I love the Ninja Trader platform. If you don't have it, you should go and try it out. It's an awesome platform. I mean, I also use TD Ameritrades because you can't beat free. And of course I use Zero Charge for the footprint. But 1273 is going to be the 61%. Let's put this. And we'll just have to see how this number comes out. I mean, 1255 is pretty key. This whole zone between 55 and 74 is going to be key. I mean, like I said, I think the dollar's going to be supported. Even if it comes in a weaker number, it'd have to be a bad number. We'd have to be sub 150 for I believe the euro to take off. If we were to go sub 150, like let's say we got 141. We could rally up to 113. I think we would have a very tough time getting beyond this area. But a weaker number will probably run out of gas between 1255 and 1274. We might be able to get up as high as, let's say, 1280-ish, right in here. But we'll have to see. And then on the downside, if we got a very strong number, let's take a look at that. You know, when you look at the NFP, you got to look at the extremes. You can't be looking at 20 pips ahead, 20 pips above. Obviously, if the market came in line, we'd probably, jump around. But you have to look at these numbers that are going to be above and well above and below the market. NinjaTrader is a very good platform, very easy to work with, and I love the clarity. I mean, you can see things so clearly. Plus, you can go back as far as your data provider will take you back. I use DTN IQ Feed. They've got 20 years of historical intraday data. Can't beat that with a stick. Let's take a look from back here. So it looks like 1086 is 61% of this move. So let's mark that off. And 1043 is that little bias pivot. So if we get a pretty good number, this area is going to be, the same way I was looking at 74, between 55 and 74 here, and that's to a lesser extent. This would be pretty key, this 71 to 88. You can see that here. That would be pretty key, and 86 being the 61% of the move from back here, 912 to 1366. So that's the way I would look at it for the euro. Once again, I think this number could be really, I don't want to say anywhere, but like I said, I think it'd be anywhere from 180 to 222. Could it be higher? It could. It wouldn't shock me if it was, but we'll have to see if there's any back month revisions, and more importantly, the wage gain growth. Let's take a look at dollar yen. Luca says, do you think the unit labor cost jump implies higher wages necessarily? It's not that. It's here's the deal on that. I'm not getting wonkish. It's just that I told people you can keep it simple. I told you 20 months ago, Janet Yellen said we will normalize rates, and she repeated that multiple times afterward, multiple upon multiple upon multiple times afterwards. They will normalize rates once they see sustained job growth and sustained wage gain growth. That's all you have to look at it. I'm not dissecting a whole bunch of stuff. It's just that if we get a 0.3, it's just going to show, what it's showing is we're gaining momentum. And then that would, you see, don't forget, they just raised rates for the first time in what, 8 years or something like that, last December. A quarter basis point, and they haven't moved since then. So it's within reason that they would now if they get a decent number coupled with wage gain growth. So, and it wouldn't be much to look at. I'm just saying, is that just be another quarter point? So that's not a whole lot. So that's all. I'm just keeping it simple in that sense. Ivy says, thanks to you and Blake, the dollar-yen assist on yesterday. He made 52 pips. Enjoy the holiday, mate. Yeah, thanks a lot, Ivy. I appreciate it. Because I appreciate it. Well, yeah, thanks. I'm glad you did well on the dollar-yen. Because yeah, we won't have a webinar on Monday because it's Labor Day here in the States. So yeah, I'm glad you pointed that out. Whit was asking, who to use as a broker? I guess Interactive Brokers is not allowing leverage FX trades anymore. I use a few brokers. I don't give that information out, but I use a few to mix it up with one that's a very, well, because I trade the spot and I trade the futures also in FX. She's a pretty good, solid, big broker, a good one, but not one that's well known. But you can use, there's several brokers that you can use. I mean, they use it, MB Trading went to Trade King, and there's FXCM and other ones. But you're right, they don't allow too much leverage. You got to be careful with leverage. It really can get you into trouble. Yeah, there's different ones. I mean, I use, like I said, I trade the spot and I trade the futures in FX. I kind of mix them around a bit. So anyway, let's go and move into the dollar yen. Now I was saying I thought it was a good trade from up there. I mean, I got short at 384. But I was telling to another, what's his name, Casey something. He was talking about he was hoping to get lower, and I go, this thing's overall is, I took it as because I thought it was overdone and it already rallied 400 pips since Friday. But I mean, this market's bullish, and I've already been telling y'all like crazy why I thought it wasn't going to be able to hold below 100. I gave you all the reasoning there, and then as we moved higher, compliments of Yellen and Fisher, and then the Bank of Japan got on the wires and started talking and gave it another extra boost. This market's going higher, and let me tell you, this is their last chance. It's going to be the last of the Mohicans. This is their last chance to do something. I really believe that. They can do all they want, but this is their, and I think that they've done pretty good, biting their tongue while this market just went lower, lower, lower. Let me tell you, folks, this is their last chance. This is it. If you don't do something at this next meeting, it's over. It's going to be too hard to pick it up. Not to be totally 100% over, but it's just like you would have missed an opportunity because it's come back. So this market, because remember when it was way up here, and I don't even have that much data loaded. I could load more data. Yeah, look, but we're back up here in the 120s. We really struggled, to give you a broader perspective. Remember it got up to like 128 or something like that, 126. It really struggled in this area. So when it broke, see, we broke out of here and we rallied back up, it really fell. And this is right where the Bank of Japan was talking a lot of smack. They could do whatever they want. The U.S. can't tell them what to do. And I kept telling you, I go, yes, they will. They're going to tell the U.S. just went in there and told them how the cow eats the cabbage. And I told y'all that there. It's not like as if I told you down here. Oh, yeah, I can tell you. Like, no, I told you right here. Right here. Actually, it was right before. This came up on a Sunday. I told you right there. The U.S. was going to tell them how the cow eats the cabbage. And from there, we just went lower. But the point is that there was a good thing for them to come this low. So if they want to work higher, we have, this is potentially the very infancy of a move. And so coupled with if the U.S. raises rates, a strengthening dollar, and if the BOJ does their stuff right, they can be back up here around 110, 112. I'm not saying in short order like the way I called the move on the dollar CAD, but it can be working up. So that's what I'm saying. You got to be careful. Someone was telling me they have some short orders above the. You got to be careful. Unless you're day trading that thing, you better be careful. Because I even thought at one point yesterday, I was thinking, you know what, maybe I'm going to take a loss. Because maybe this thing, what it might do is, I go, it might just keep plugging away. And I go, and if it's, my thought was, if it goes too much higher, I may just go in and bail, towards the New York close. Because when you get into the Asian session, it might just keep trying to push higher and higher. And I don't want no part of that. I go, so fortunately that manufacturing came in weaker, and then all of a sudden the wheels fell off temporarily. But it's held up relatively well. So you got to be careful on this. Levels above the market, I guess we should look at the 61%. It's almost time for break. It's already time for break. But I'll pull up the 61% real fast because I am taking my break. So they'll probably be doing the live thing with Blake. So, it's just like, I'm going to take my break. So full 47 is a 61%. Let's just go mark that off. So, potentially on a good number, this is where they'll probably run up to, then run out of gas before, right here in this 46, but you got to be careful with this one. Once again, I think you really need to let this number play itself out. I really do. And really, the market's going to swing around back and forth, but you have to look at the guts of the number. Does it really, depending on what the number is, does it really suggest that a rate hike is likely? That's what there's no guarantees, although my take is 245K coupled with a wage gain growth of 0.3, and it's a done deal. But I'm saying is you're going to have to look, like let's say we were to see, we had a very nice report last month, 255, but what if we saw like it revised down by 20,000? I'm just saying, that would take the wind out of the sails. So you're going to have to look at a lot of stuff, I think, on this, because it's going to be very important that whether the dollar adds on to these gains is predicated on whether they think we're going to raise rates as early as September. I think the dollar will remain bullish, but it will sustain a correction. Need to go and take a break. Okay, everybody, welcome back to the crossover. And we had talked about the cable a couple of days ago, and my take was, it's held up relatively well, considering everybody else has got their face bashed in by the dollar. And that was my take, is that, once we started moving, I think, this thing can go and move higher. It's holding up relatively well. Obviously holding up above this 3086, but once we got going, we got that great news yesterday. I thought the news is a game changer. And because it's just one on top of another on top of another. Now, I did see a report the other saying, which I did allude to yesterday, manufacturing only makes up 10%, but manufacturing is pretty key. So they're going to be looking at the services number as we come to next week. But like I said, if we get something like in the NFP, we get something like job growth in the, let's say 172. which would be really kind of like a Goldilocks number, so to speak, and wage gains of only 0.2. Obviously, got 0.1, that'd be bad, and that would really push the dollar lower. But I'm saying is that opens the door for this saying on a good services number to be up to 135, 34.84 next week. I really think so. On if we get, it would have to be a wage gain growth of like around in the lower 170s, 160s, and wage gain growth of no more than 0.2. We'll send the cable higher, would probably close above 33.75, and then on a decent, has to be a decent services number, we'll get beyond 34.84 next week. But I'm just saying, that's how I'm looking at it overall. I may day trade scout, but I look at things overall, where the market can potentially go to. That way, if I see something like, oh, wait a minute, is this probably it? Is that the top here? Well, if you look at everything, then you say, wait a minute, we have the potential to move a whole heck of a lot higher. So we'll have to see how the number plays out with NFP and see how the services number comes in with the UK. But wow, post-Brexit stuff, it looks like it's a whole bunch of nothing at this point. The cable's done really well. And like I said, one of the guys mentioned, and it was a great comment, and I also saw that pointed out, was they ended up getting a 10% devaluation out of the thing. So that's really sparked up some growth too. So it's all good in the hood, for the UK so far. It doesn't look like this Brexit thing was much of anything. So let's take a look here at the Swissy. We came into a very key level yesterday. Here's a 78%. We were talking about how we were getting all these pairs coming in around the 78%. That's why I thought it was just overdone. We have to take a respite. The dollar would have to take a respite from these levels, and which is what we've done, so hence my idea of, taking a scalp short against the dollar yen. But it's come back really well. That's what I'm saying is you got to be careful because not only the potential that the U.S. raises, but it's more than that. Is that the BOJ's, I think they're going to take some action now. They've bit their tongue and they bided their time for a while, and now they've got the wind at their backs, got some wind in their sails, and man, I think they're ready to scoot. So you best watch out. Try and take on this dollar yen. But we came a long ways in the Swissy, and we pulled back a decent amount. We really have. We just got really overdone yesterday. Obviously, in hindsight, everybody says, oh, yeah, I can see that. Well, I didn't see anybody talking about selling the dollar yesterday. Blake was. I was. Some of y'all were. But did you see very many people across the wires? Not across the wires, but across, other services or Twitter or whatever saying they were selling. Nobody was talking about selling the dollar. We were. Of course, now we come back, everybody's, oh, yeah, it was really overdone. Well, yeah, you tell me after the fact. That doesn't mean anything. Just like the dollar yen, I talked about that yesterday. I don't need some freaking clown telling me the yen's going lower here. Hey, dude, where were you up here? Were you saying anything up there? I don't need you to tell me anything. That's Billy, that's great, perfect thing to just totally unfollow someone at that point. They mean nothing to me. Like I said, below 100, who was telling you that the dollar yen was a pretty decent risk reward buy? It was me. Because I thought the BOJ cannot let them get a foothold below 100. And they really didn't say much of anything. But I think, more importantly, other traders thought the same thing. That's why even though they pressed below 100, they really weren't, notice how they made several stabs, but they really weren't closing very much below 100. So the door was open, obviously, with Yellen and Fisher. That really got things scooting. And then after Yellen and Fisher, started pushing the car and started gaining some momentum, then the BOJ, Hamada, and Suga, once they had momentum in the car, they jumped on board and started pushing the car to it. Boy, it really got some momentum, and off it went. So you have to look at these things in context. It's not just about the technicals. The technicals get you, the technicals, I heard someone say, and that's very good. It's true. The technicals help you assess the risk of a trade. That's all that they do. It tells you, wow, just like yesterday with me, I was thinking, man, this doesn't look good. If we get much above, here's 404, we get much above that, I'm going to have to frickin' bail. Because my concern was if we close, like at 416, 417 in the New York session, they're probably going to take it in Asia and run it past the 430. Now I'm really down. But now I'm down like 50, 60 pips. I go, that's pretty stupid. You see what I'm saying? So I was like, I'm going to have to bail, even though I wouldn't be surprised if it came up here and rolled lower. Of course, we got the weaker ISM manufacturing, which I was saying my whole take was wait for 482 and preferably wait till after ISM manufacturing. But I got 484 and I thought, well, heck, that's probably pretty good. Probably better take that. But they still kept pressed a little bit higher. But yeah, the technicals help you assess, but I think you need to mirror the both of them and even if you don't trade the fundamentals, understand the theme of the market. Just like I've told you, is at this point now, the BOJ has a wind in its sails. That's where they're willing to press. I mean, they're willing to start talking. After Yellen and Fisher got things going, then Suga and Hamada came across the wires on the same day, literally within about 2 hours of each other. So they gave it at the end, the 1-2 punch. As far as the CAD, this was kind of upsetting in a way because, I was pointing this out yesterday. And I was pointing this at 3131 area back again, and this 3147, 78%. But I already had I wouldn't say I had my hands full because it wasn't even a very big position, but I was already underwater with the yen, and it just kept pushing higher. And I'm like, well, it just keeps giving this boost. But I really wanted to go in and buy the 6C when we were up there. And obviously, we saw a pretty good sell-off here, in the dollar CAD. Good for about 60 pips. It came out pretty fast, too. Once we got that manufacturing, it really came out pretty quick. Once again, we're just going to have to see, how the numbers come out. It probably sounded crazy, but I told y'all over a week ago, and actually around 10 days ago, I told you, I go, better be careful. This thing could get to 132, and look where we went. I mean, we came up 53 pips shy. I can't believe how quickly it got up there. I was telling people, I go, from a risk reward, this is the best one. It's the best one out there, that dollar CAD. This thing can really get scooting, and get scooting it did. A lot of it's always going to have to do with crude oil. As far as trading the NFP, I don't think this is a great pair to trade. I mean, a lot of it's going to do with what's happening in crude oil. I think the key ones to trade, obviously, based on the NFP, is going to be the, obviously the euro, the yen, and the cable. Those are the key ones to look at in my book. I don't think the CAD is going to be as much of a player here. We're still doing pretty good on time. We'll take a look here at the Aussie. I think that we can still work lower here in the Aussie. I told you I think it's going to 74.14 down here. And I'll show you what we're looking at. See all these touches right here? Unless we get a bad number, and I'm talking about non-farm payroll, this is where we're going to, I think, 74.14. See all those nice touches? So we run out of gas here. I think we'll eventually be working lower. Might find some support, 74.50, but before all said and done, I think we'll get to 74.14. Let's go and take a look at the gold, which we did take a little bit earlier, but we'll take a look at the gold. We'll have to see how the number comes out, but for areas where they could rally to would be this 1330. 1330, you can see here we had it marked just up as kind of like a bias pivot. That's what we had in red for some time. 1330 is going to be the 61% from 5 on up to 46 right here. And 3170 is going to be the 38% from 5 all the way back up to 1374. So you got some nice confluence. On a very weak number, we'll go past that. I mean, we may get up there and then pull back, and then it might try and reassert itself. And then you'll probably see some very nice resistance right just above 37. And 37.40 would be the 78% of this move, and 39.80 would be the 50%. So we'd probably run out of gas somewhere here on a very weak number. Lower, we talked about this, it's this 250 area. And this is what I think that eventually we'll get to before we see a bounce, which is in here, 93 to 96. I did say on a really good number, we could, fly on down and put in, come down here and put a print at 89. But it'd have to be a pretty good, strong number because, here's my take, is because we've really worked off a lot of this market here, this oversold one here. So we could dip, but I don't, at this point now, we've made several stabs down here. You see how we continued to weaken, and we came down here, and the market tried to pick itself up, then we came back down here again. You see, these are very nice reactions, and it looked like we were going to do okay there, and then also we make another move lower, and then we see a nice pop. So I think that the door is open. That I don't think that now the wheels will totally fall off the caboose. That's what I'm thinking. But we'll see. But on the upside, I think that the key numbers are going to be 1330 and just above 1337. That's what I think that on a weaker number, like I said, I think we're going to come in the two teens, and I think the range could be anywhere from 180 to 220s. I really don't have a good feel on how this number is going to come out. I really don't. It wouldn't surprise me if we'd get up to 240s. I kind of think that that'd be the best number you would see for a little while. But the thing is, if we did get a number like in the 240s, 250s, because the market has been, for the most part, so many analysts have been very, I wouldn't say bearish, but very, doubtful of these U.S. numbers, that they'll freak out and then they'll roll over to the other side and they'll be talking about almost all this inherent strength and this is going to happen, and they're going to point to the new home sales and say, yeah, even when we thought it was going to be weak, it was strong, and there's all this, support. And I think that that's the way that they would look at it. So, but that's about it. So Blake should be coming on, and that's it. We'll just have to see how things play out. I'm in no rush to put on any trades whatsoever. I want to see this thing play out. If the number comes in weaker, I think the dollar will be supported, but we will see a decent correction in the dollar if the number comes in weaker. The number will have to come in very bad. I think we have to get a number like 140 to see the dollar really get whacked a bit.